Hello everyone, how is it going? Hope you're all right. This is a milestone moment. Today, with this video, we start the last chapter of our AS syllabus. Congratulations to you. You've put up with this so far. There's only a little bit left to go. We'll be over the line very soon. And this last topic is on budgeting. Okay? Now, a budget is simply an allocation of money for a specific purpose. And you all also have a budget assigned to you. Think about your pocket money for a minute. Your pocket money is given to you so that you can take care of yourselves, buy a few things during the week or during the month, however your money is given to you. And at the end of that period, the same amount is again given to you for you to take care of your needs on a daily basis, right? The same way, businesses also assign different amounts of money that they have in it within the business to the different departments that it has so that they can all do their own thing. And of course, every department will incur different types of costs when they are operating during the yearly basis. So for example, marketing will need to advertise, so they will need money for that. Operations will need to bring in raw materials, they need money for that. HR for clearly training and recruitment, there's money needed, and finance will simply have to pay the interest. So all departments require certain amounts of money that the business has in order to be able to conduct their own processes. And that's what budgeting is. It is simply the process of forecasting how much each of these departments will need and then assigning that amount to each department based on the resource requirements they each have. We all know the different departments, we all know what they do, we all know the resources they need. So it's up to the finance department to sit down with everyone, ascertain exactly what is needed in terms of the money for each department during that year, and assign them that budget. That is the process of budgeting. And at the start of each year, and as just like at the start of each month, your parents, even you, budget for the entire month, right? Well, of course, there's going to be grocery expenses, car expenses, rent expenses, and same way business will divide up its money to see how it's going to cover its expenses. Not only that, how business is different from a household is that you're also selling products as a business. So not only are you predicting or trying to budget how much you'll spend, you'll also try to budget how much you'll make to have some idea of what the future holds for you. So in terms of the types of budgets that the finance department makes at the start of year, you will always look at the amount of sales that you will make. So you can assert an amount of income you have. Then in order to make these sales, you will have to produce. So it is a production budget, which obviously has the resources cost associated with it. You will also try to keep an eye on how the cash is being used so that your liquidity position is not in trouble. Marketing budgets are usually quite large because it is expensive to undertake above the line promotion methods. And eventually, you also want to predict how much profit you'll end up making for that year. All of that is the process of budgeting, and all businesses through their finance department will have a forecast at the start of year as to how much they'll be making and how much will it cost them to make that, so that they can at least compare at the end of the year and see how their performance was on a year-on-year basis. So let's take a look now at how the finance department and specifically the chief financial officer, he has a big role to play here to determine exactly what it will take for the entire business in terms of the budgeting process. And it all starts with, as with all businesses do, with the identification of that year's organizational objectives. Now, objectives, as we've learned through the concept of management by objective, is the start of everything that a business is about to do during that year. So in order to be able to determine how much money you will need, you will first need to know what is it that you're going to do. So all your objectives, are a result of the external factors and the dynamic nature of it. So you'll have to see if the market's doing well, perhaps expansion, not so well, perhaps profit satisfying. You will also need to see what happened last year, and maybe if you want to continue on in the same way, then use the same objective or perhaps a different one because the previous one was achieved. And with that, you want to come up with some forecasts for the future. You can't fly blindly into the future. You have to have some idea as to what it will cost you to run the business during that year. Once this process is done, then we move on to the second stage of budget setting process, which is deciding how these budgets are going to be allocated. Now, companies can use 3 ways to divide their budgets, and it's the same way the way they divide their organizational structure, which is either by department. So marketing get it their own budget, operations their own, so on and so forth. You could also do it according to the products that you have. So let's say we are Coca-Cola. So the brand Coca-Cola gets its own budget, and within that, the operations and marketing finance of Coca-Cola will be one budget. Maybe Sprite gets a different one, Fanta gets a different one, Dasani gets a different one. So you could divide your budgets according to products. Additionally, if you are a multinational, then you can do it by region. So Asia, certain budget, US, North America, certain budget, Europe, certain budget. So you can divide it up according to these three categories so that everybody knows exactly what amount of money is going to which part. Then from this, we move to the third stage of our budgeting process, which is assigning the actual budgets. And as we've seen, they come in different forms. They could be a cash budget, a marketing budget, sales budget, materials budget, which is raw materials, profit budget. Every department or product or region will have these assigned to them. And at the end of each year, they will all be combined to see exactly what the overall or the master budget of the company was, the overall spending. And that comes in the form of these two financial statements, which the finance department, of course, is responsible for making, which is the statement of profit or loss, which tells you that whatever budget you had set for profit during this at the start of the year and whatever you made at the end of the year, you can make comparisons to see what your performance was. And you can see your statement of financial position, which shows you all your other budgets, including the cash budget, and then you can compare your performance over there as well. So all companies, in order to have a detailed understanding of what each department or product or region is supposed to do and how much money do they have, they will set these budgets, compare at the end of the year, and the same process will be repeated again at the start of next year.